Technology stocks, the Nasdaq 100, the beloved QQQ ETF. Is it time to buy them again? What we're going to look at here today is our research that indicates that we're seeing early signs that the reward to risk to buy the Nasdaq 100 specifically is getting better again. We've been bearish and out of tech stocks for many months now and being quite public about this, and certainly to our clients been mentioning that really every day. But we're starting to see some extremes being reached, both on the downside in some tech stocks and on the upside in other parts of the market like commodities. So I have, I think, about 3 charts I want to go through to kind of lay out our case for what we see here. Now again, I'm not saying, I want to be clear, I'm not saying buy the Nasdaq 100 in hand over fist right now, but I think the reward to risk is starting to get better. So it's early stages, but I want to kind of give you an update. So first of all, let's just have a quick look at this chart here, and what we're seeing here for the most part is it's just a simple way of looking at the Nasdaq 100. I'm going to zoom in a bit closer, and one thing that we've been talking about, this is very technical, very near term, but one thing that we've been talking about is essentially having the potential for what we call an ABC correction. Basically, if you have an uptrend, you will then tend to see some sort of an ABC correction, meaning like move number 1 to the downside is A, then a counter trend move B, and then C. And I think we may be near completion, or at least in early stages of completion of this C wave, the last wave. Now it can certainly go a bit lower, but we had a pretty important low being put in from a near-term perspective on February 24th, and undercutting that may not last very long. That's kind of our case here in the near term. If we peel this back a little bit and we look at a weekly chart and we give ourselves a little bit of more wiggle room, then what we're seeing here is we're actually finally moving back to something as simple as the 50-day moving, 100-week. Let me correct myself. The 100-week moving average, which I think is quite interesting to note. Again, it's not the end-all, be-all. This is where it's all going to end and stop, but it's notable. And when we look at this whole space in relative terms, and this is a chart I've shown several times before, and we take the energy sector and we divide it by the Nasdaq 100, we're starting to see on the multi-year weekly chart that we're getting to a point now where maybe, just maybe, previous support may now become some sort of resistance. So we're looking at the call here is not just based on tech stocks, but it's also based on them in relative to something we've been very long and bullish of, which is energy and commodity related plays. And particularly the XLE ETF here, you can see it may be getting to a point where it's overbought, at least for a near term, maybe even in an intermediate term lens. Wouldn't take much. It would only take oil to stop going up, and a lot of this space will come under some distribution for a while. We still remain constructive energy for beyond the near and potentially in immediate term. So both in relative terms and in absolute terms, being looking at the Nasdaq 100 again does make sense. Now, if you want to kind of broaden this out a little bit, and you kind of look at tech more broadly, and we're going into a bit of a higher riskier sort of stocks here, but I'm gonna quickly just bring up 2 of them. One of them being, oh, that's not the one I want to talk about. It's snow. I knew it was a simple synonym. SNOW. This is Snowflake. A lot of people didn't even know what this company does. I'm here to tell you. I think the reward to risk, again, this early days, so I'm not saying go in blindly and just buy this. But the reward to risk is starting to get better on something like Snow. I think it's also a lot better now on something like PayPal. I'm going to quickly make this a bigger picture chart so you guys can see this. PayPal, a stock that literally everyone was long and inevitably had to correct. So now we're back to basically where it was at the lows of the pandemic, or near the lows of the pandemic. And I think the reward to risk here is getting really bad to being short these things, and it's getting a lot better being long. And one way you can really avoid and we've been able to avoid the pain and to have a lot better returns with a lot less volatility when it comes to these kind of markets is by using a specific option strategy. And when it comes to using options, I'm a big fan of making less directional bets. One can certainly couple them with more aggressive directional bets, but as a base sort of layer of returns, making a more conservative bet with options has been a real blessing for us over the years. And we're going to show you guys exactly how that works in the webinar this week. So have a look and click down below to check that out, and hopefully see you in the webinar. See you soon.